Topic: Business documents for cash transactions. What is a receipt? A receipt is used as a record of a cash payment. When does a supplier issue a receipt? A supplier issues a receipt to a customer when they pay for goods using physical cash. Are receipts only for cash payments? Sometimes a receipt is issued when the customer pays using money in their bank account. What else might record cash payments? Other business documents may also be used to record these transactions. What is a check? A check is a form of payment written by the customer and given to the supplier. What happens to received checks? The supplier takes the checks they receive to the bank and deposits them into the business bank account. What information does a check contain? The details of the customer's bank account, the name of the supplier, the amount to be paid, the date written, the customer's signature. When does a supplier use a check as a business document? The supplier will use the check as the business document for payments when the customer pays by check. What is a check counterfoil? Cheques are attached to counterfoils in a checkbook where basic details are recorded. What information is recorded on a counterfoil? The name of the payee, the amount to be paid, the date written. What happens to the counterfoil? The customer keeps the check counterfoil as a record of the payment. What is a petty cash voucher? A document used when paying for small valued purchases using petty cash. When are petty cash vouchers used? When a check would not be appropriate due to the low value. How are petty cash vouchers used? The customer pays the supplier using petty cash and records details on a voucher, which are then transferred to the petty cash book. What is a paying-in slip? A document used when depositing cash and/or checks into a bank account. What information does a paying-in slip contain? The total amount from cash, the total amount from checks, the total amount being deposited, the date. Who keeps the paying-in slip? The paying-in slip is kept by the business as a record of the deposit. What is a bank statement? A document issued regularly by a bank detailing all transactions within a period. What does a bank statement show? Money going in and out, opening and closing balances. What transactions can be reconciled using bank statements? Payments by credit transfer, payments by telephone transfer, payments by direct debit, payments by standing order, bank charges and interest. What is a direct debit? A recurring payment set up by the recipient with variable amounts, dates. What is a standing order? A recurring payment set up by the payer with fixed amounts or dates. What document does a customer use for credit purchases? Purchases invoice. Supplier uses sales invoice. What documents are used for returns? Customer issues debit note. Supplier issues credit note. What documents record cash payments? Receipt, both parties. Petty cash voucher, customer. What documents record check payments? Check counterfoil, customer. Check, supplier. What documents record bank transfers? Bank statement, both parties. What document records bank deposits? Paying in slip, supplier only. Thank you for watching. Make sure to like, share and subscribe to Flashcards and turn the bell icon for future updates. See you in the next video.